DataVault AI stock surged 50% and it's trading at slightly above $3 at the time of this recording. Now, the main reason for the spike in the stock price appears to be their partnership with Logistics Health to transform the prescription drug industry. Now, this seems good, but look at the stock performance over the past few years. The stock lost 99% of the price, and whoever bought early got annihilated. They will never recover their money and got their investment doomed. This company deserves an award for reverse stock splits. Now, they did 3 splits, and the reverse split overall with 30,000 to 1. This is insane. Now, if you are a cautious investor, you would stop digging further into this. But if you are curious about speculative investment, please continue watching this video. Before I move on, make sure to smash that like button, as that will motivate me to do more videos. Subscribe to the channel, and let's continue growing together. I want to clarify, this is not financial advice. I'm not qualified to give financial advice. This is simply my thoughts about DataVault. In full disclosure, I would never touch trash stocks like these. Now, let's look at why the stock price went up recently. It's due to their multiple partnership. They have commitments with IBM for integration of Watson X, AI, and government tools, Max International to tokenize commodities like gold and copper, Logistics Health for blockchain-enabled prescription tracking via pharmacy chain, and more. Now, you hear words like tokenize and blockchain, and yes, you guessed it right. DataVault is a Web3 or Web 3.0 company focusing on AI-driven data monetization, tokenization of real-world assets, and digital twin and data technologies. They get revenue via licensing of patent platforms, exchange fees from tokenized assets platforms. Now, Web3 was popular a few years ago, but thanks to AI, most people forgot about it. There is no immediate need for this Web3, and many companies are focusing on AI for now. Tokenization of real-world assets sound promising, but generating revenue with that is a massive challenge. So with this, let's look at some numbers. We heard a lot of revenue streams and technologies, and yet they made 1.5 million in revenue in the past quarter. A big restaurant can make a revenue of this size per quarter. This company is valued at over $1 billion. Now, for 2026, there is a bright light. They're anticipating 40 to 50 million in revenue. Let us now try to do a valuation for this company. Most of it is an estimate, as we don't know any details of this business and its potential and demand. For 2030, the estimate is 400 million at the midpoint. This assumes tokenized asset marketing getting to 1 trillion globally by 2030. I personally do not believe this would happen. But it is good to know what has to happen for this company to make 400 million in annual revenue. Current net margin is negative 1,300%. This sounds scary, given this company has a history of burning shareholders' money. Let me now show you a valuation that I do not believe in. This is still possible if tokenized assets are a thing in 2030. Net profit is 20%, as they have high margin licensing business, multiple of 35, and reasonable dilution gets me to $8 stock price by 2030. From the current price of $3, this is 156% gain. But please be careful, as this is extremely risky. If I had a 10x gain, it could be worth investing. But for 1.5x or 2x, I'm not investing in this company. It's not worth it, in my opinion. I value my money, so I would stay away from these sort of companies and investments. Now, of course, this stock can go back up a lot due to hype, but I'm not getting into the FOMO trade. So guys, just be careful. Do your research before investing in any company. I would stay away, and I am not touching DataVault. Let me know your thoughts in the comments, and thank you so much for watching.